Hello, chart watchers, and welcome to this Monday, November 19th Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the market is off to a rough start this week. It's Thanksgiving week, typically a pretty bullish week, but not today. Dow Jones Industrial Average currently down 374 points. The S&P 500 down 40. The NASDAQ now challenging the late October low, down 177 points. The Russell 2000 down 28. 10-year Treasury yield moving a bit lower, down 4 basis points, actually down just less than 1 basis point, down to 3.07%. But it, too, is challenging that late October low. We want to watch that. Volatility Index on the rise, as you might expect, up a little bit more than 10%, up nearly 2 points, over 20. The technology sector, XLK, leading to the downside. You can see down more than 3% today. The communication services continues to be weak as well, down more than 2%. Some of the names to the downside today, you can see Align Technology, ALGN, down more than 18 points, so down about 7%. Salesforce.com, CRM, down 6% today. Adobe, wasn't that long ago, they raised their revenue forecast. I think it was back here in mid-October. Stock was up to $260. Well, it is back down now to $222, down 16 so far today. And, of course, Apple. I know Erin's father, Carl, wrote about Apple perhaps weakening considerably. That was a couple weeks ago, and it has continued to move lower. Apple down about 3 2/3% today, back down near the low we saw midweek last week. All right, Erin, it is Monday. We're off to another fresh week. Not looking good.
Holiday week.
Market. Yeah.
Holiday week. I had expected not a whole lot of action, honestly, during this week, but maybe everybody's selling right before the holiday. I don't know.
Yep. Well, they got me stopped out of just about everything I owned. So.
Yep, I lost 2 today.
So. This was a rough morning for me, but I thought everything looked good last week. We're going to talk about that some more. And I know the poll today talks a little bit about short-term trading and some of the issues that you feel you might face that you struggle with from time to time. I'll be honest a little bit later when John Hopkins joins, and we'll talk about it a little bit. But I made some mistakes on Friday, and I'm paying for it today.
Well, yeah. Like I said, I was kind of surprised because some of my longer-term trades ended up stopping out today. So that's more concern for me as to what's going on. So
the market keeps going lower, though. Sometimes you look back and you say, "I'm glad I got stopped out." So
oh, absolutely. I'm not that unhappy. I'm just kind of worried that, when those don't usually go away. My stops don't usually trigger on those intermediate term investments. They're mostly buy and hold, and to see 2 of them go today was a little bit concerning.
Yep. Oh well, what do we got today?
All right. Well, upcoming schedule for this week, we have tomorrow. I'm going to be doing a workshop on index analysis versus indicator analysis, and I'll show you what I mean by that tomorrow. Greg Schnell will be our guest on Wednesday. Looking forward to talking to him. He hasn't been on the show in forever, has he, Tom?
He has not.
Nope. No Market Watchers, of course, Thursday and Friday. We will be off for the Thanksgiving holiday. So we will see you next Monday after the holidays. But we still have a lot of good week to go, and today's schedule is no exception for excitement. We, of course, are going to start off today with our Monday setups, and we're going to follow that with the earnings spotlight. And we also have are going to have some great information in the DecisionPoint Report. I did want to mention, though, as the arrow is flying around, is, when there is Thanksgiving, there is Black Friday, but there is also Cyber Monday. So we do have a special that will be running, so keep your ear open for what that will be. All right, and then we'll just click through here that agenda really quickly. Yes, Monday setup, spotlight. Oh yeah, 10 and 10 to 1. Biotelemetry will be our first symbol.
All right, it's time to get going here. Not a great day, but I tell you what, we'll go ahead and start it off first with the economic reports. There was just one, and this one was kind of shocking, to be honest. November Housing Market Index. At first when I saw this, I thought maybe it was a misprint. 60 versus 68. I mean, I've never seen the housing market index miss by more than a couple, maybe like 66 versus 68, but 60 versus 68. I actually went to another source to make sure that I had the right number. And I do. But the interesting part is, and we'll take a look at this in just a few minutes, but first we'll take a look at the 10-year Treasury yield. Housing stocks actually are up today. So the group, we always talk about sell on rumor, buy on news. And it seems like maybe a lot of this stuff is already built in with housing stocks getting hit so hard throughout 2018. We'll look at that in just a minute. But first, let's take a look at the 10-year Treasury yield. With that weak housing report, you can see rates are moving a little bit lower today. Right now, 3.067, challenging that low that we saw at the end of October. If that doesn't hold, and it may not, I really think this 3.301 level could come into play here. That was the high, triple top high, really, after the gap down that we saw in the yield back in May. We had a recovery in June back to that level again at the beginning of August. Couldn't get through that 3% area, 3.01. And then once we finally went through, we held it, never went back below. So I think this could be a test. I'm still looking for sideways consolidation. Fed tells us the U.S. economy is strengthening. There's going to be further rate hikes ahead. I believe them. They try to be pretty transparent. But currently, we are just simply sideways consolidating. We'll continue to watch this. Okay, let's take a look at earnings that we had out this morning. JD.com came in at 12 cents versus 8 cents. So overall, not too bad there, although they did warn on their revenues going forward, and they did miss on their revenues. So the stock price not doing too well. Spectrum Brands, really a big miss there. And they missed also on their top line. Stock has gotten hit pretty hard. We'll take a look at both those charts in just a second. But first, after the bell today, we do have a number of reports coming up. The two big ones, Agilent, ticker symbol A, and Intuit, another software company, INTU. And then you can see a few others that are more in the small to mid-cap range that will be reporting after the bell today. All right, let's take a look at JD.com and see what's going on there with their chart. The stock has been in a downtrend for quite some time. Today, of course, came out with the bad news. JD did report revenues, $15.25 billion. Market was expecting $15.6 billion, so a miss there. And as I mentioned, they lowered their Q4 revenue guidance. So combination of both of those, not good. Stock down almost 5% today. So far, holding the double bottom that's in play. But I don't think we're out of the woods yet, even with a double bottom and a triple bottom with today's low, unless we can rally back up to take out that reaction high closer to $26. And we are quite a bit a ways from that level. So we'll see whether or not we can hold on to the support level, which is down about 21.5, 21.25. But I would say for now, we continue to consolidate in a sideways rectangular formation here off of a downtrend, which to me suggests that we're more likely to go lower, but we'll keep open that option, perhaps getting a breakout to the upside above 25.5, 26, but I'll need to see that first. Next up, Spectrum Brands, SPB. And when we take a look at this chart, check this out. Huge move down today. The stock is down 22%. And that's after the stock had already fallen from 92.5 back in August all the way down to where we had closed on Friday, which was just a little bit above $59. That was a pretty steep drop in about 3 months prior to today's 22%. And if we pull it up on a relative chart, which we like to do, you can see that it is in a group that's been doing very well, moving much higher, more of a defensive area, and yet Spectrum Brands has been moving lower. So when we take a look, even though the group has been doing very well, and the group has been breaking out relative to the S&P 500, the problem is you've got one of the weaker stocks within the space. It has been downtrending relative to its peers for quite some time, and these are the types of stocks, don't be shocked when you get a bad report. There's a reason why money is rotating away from stocks like this, and usually it's because their business prospects are dimming or they're going to report a bad quarter, something like that, and clearly we saw that here with Spectrum Brands. Always want to make sure that you pay attention, not just to how a stock's performing on an absolute basis, but if its overall group is performing really well and you see the stock breaking down, that is a pretty bad sign, I would say, for what you might expect going forward. Okay, let's pull up. I want to take a look in my blog article this morning. I wrote about home construction stocks, and the fact that they've been out of favor, and whether or not we might be reaching a turning point from a longer term perspective. So this is a 5-year chart. And you can see back in 2015, 2016, prior to the big breakout and the huge move that we saw in home construction stocks, we had a lot of consolidation. You can see all of these tops, many, many tops between 600 and 625. And so all of these, marked a key area of resistance, which we finally took out in the first quarter of 2017, never looked back. And then when the weakness kicked in 2018, look at what we ended up doing. I had written plenty of times, we wanted to watch that 20-week moving average. Don't jump the gun. The downside momentum remained in play. You can see the weekly PPO continuing to drop, even though we had some short-term pops in here. We couldn't get through that 20-week moving average. I speculated, I know probably a couple of months ago, that maybe we would hold around this 725 area, because as we moved up, we at least had 2 or 3 months of consolidation in that area before we broke out again. So I was thinking maybe we'd hold it. We did not. We broke down below. And now I think this is a much, much more significant area of support on home construction, because we had so many tops in this area before we broke out. So that should send a lot of folks moving in and buying home construction. So if we pull this up, see the live version with today's action, you'll see it's continuing to hold up, even though the market's getting hit really a lot today. If we go in and we take a look at the daily chart on home construction, you will see that we're actually up today, up almost 1%. So when you start getting horrible news in a space like we saw this morning with the housing market index being down so much, 60 versus 68 expected, and yet we're higher by 1% in home construction stocks, it does make you wonder if maybe all of that bad news is already built into that huge decline that we saw in 2018. Something to think about. All right, let's go back. I want to take a look at the sectors, because you can see right now the market getting hit very hard. Dow Jones down more than 400 points, but it's not bad everywhere. Utilities, real estate, consumer staples. Erin's talked about it. We've had a lot of guests on here talking about it. A lot of money rotating still into the defensive areas. And when you look at a group like real estate, for instance, you're actually, earlier today, we had a false breakout. Maybe we'll get that breakout by the end of the day. But earlier, we were clearly topping the August high, and we've pulled back. Maybe that's a short-term negative for the real estate group. But when you look across here, we are still trading at a high or close to a high. So I'd say on a relative basis, real estate continuing to hold up very well. The only group I think that looks better to me than real estate is consumer staples. Consumer staples actually made the breakout, pulled back, tested the rising 20-day moving average, and has bounced off of it, continues to trade above it. So I think consumer staples is still an area, if you want to trade and you want to trade maybe in a safer area, I would say that the consumer staples area is the group to look at. All right, Erin, I know you got a number of upgrades and downgrades. So what do you got to start the week?
All righty, let's see. We had quite a few upgrades. It was interesting in that we had pretty much very little downgrades. So it's almost all upgrades. And honestly, looking at the charts for those upgrades, I really feel like it's wishful thinking. So let's look at a few of these. All right, we're going to start with TD Ameritrade. This one was upgraded by UBS from a neutral to a buy. I marked this area of resistance, and it does match up here with some resistance back here from December. But mainly I was looking at this particular low from July, and you can see we managed to get above it. But now we're starting to fail. And notice in the thumbnail, we are trading below that 20-day EMA, and the PMO is decelerating again below the zero line. So I wouldn't be looking for a breakout here necessarily. Honestly, I wouldn't be looking for a breakout. I would be looking probably for more downside. So this was one I thought was a little bit of a wishful thinking. Booking Holdings was upgraded today by Wells Fargo from a market perform to an outperform. Another chart I think is pretty ugly. You have some support being tested and so far holding at that low from August. but I have a PMO just about ready to give me a sell signal. Granted, it's above the zero line, but barely. This is not the kind of setup I would be looking for. I think you can see we did get an actionable, I think, signal here where we saw rising bottoms on the PMO, and these were declining bottoms on price. That was a positive divergence. I think it's already played out with that big rally, and now, of course, we're pulling back. I don't know if we're going to hold this. I mean, I suppose if you want to hold, look at it later on a watch list, you could, but I'm not thrilled with it. Nordstrom was also upgraded today. Gordon Haskett upgraded from a reduce to a hold. I mean, I suppose if you had to take that big drop down, that gap, you might want to hold it, I suppose. But that, again, I think is still wishful thinking. Look at this intermediate term trend model neutral signal that is in play right now with that 20 crossing below the 50. And you can see as well that we have a PMO sell signal, and now the PMO is in negative territory, which we have not seen since back in May, April and May. So upgraded, but I don't know, I don't like it. Progressive was upgraded today from Buckingham Research from an underperform to a neutral. And this one, we do see some possibilities, at least I do. We're coming down to test some pretty important support here at these tops that we saw back here in March through June. It's holding so far. We are coming back down to test it. And we do have a PMO sell signal. So I'm not really thrilled with it, but at least we're coming down here to support. Looks like we may have already held it before. So there's a possibility we could get a move to the upside there. But again, I'm not really thrilled with these. Ring Central also upgraded today. Robert Baird upgraded from a neutral to an outperform. This one is sitting on very important support right now as well. You can see that $70 support level was tested back here. We lost it, but it came back up above that 70 level. And you can see it was 70 was about the tops back here in March and April. So this is really important support that needs to be held. But, looking at these EMAs, all of them moving lower, the only trend model buy signal that is left is the long-term trend model. But you can see the 50 is starting to cut that margin between it and the 200-day EMA. Not good news. So you could watch this 70 level. Maybe we'd get a bounce off of that. But look at the momentum. The PMO is about ready to give us a sell signal below the zero line. Not liking it. A couple of other big name upgrades. Big Lots was upgraded. Intercept Pharmaceuticals, Remax, Toyota was also upgraded. Helmerich and Payne was upgraded by 3 different agencies. HP, Mallinckrodt was upgraded. Novartis, PG&E was again upgraded, and Viking Therapeutics was also upgraded. So lots of upgrades today. But as I said, looking at most of these charts, I just don't see it. I just don't see with the market doing what it's doing. I just think these are wishful thinking upgrades, and pretty much almost all of them. Let's look at our one downgrade, and that was Charles Schwab. UBS downgraded it from a buy into a neutral position. We're sitting here, if you look in the thumbnail, we've just closed this gap. And the PMO is topping below the zero line. So I think the downgrade is, a solid downgrade here. Since that gap is now closed and that support isn't really holding there, I would be watching that closely with the PMO or PMO top below the zero line, not looking too good. So on the downgrade, I could certainly see it going down to test that $42 level if that gap closes today as far as where it closes the day at.
Hey, Erin,
yes.
I got a question for you. I mean, I'm looking at this. I know you follow the OBV. What do you make of October and November with prices going down and the OBV going up?
Right. Oh, I didn't mean to do that. Okay. So you can see when you look in the thumbnail, I mean, the OBV went crazy here because we had all of those up days. So that's what really gave us that big move to the upside on on the volume, which was great. But then we, we peaked out, and you could see it peaked just above that 50-day EMA. And then we started to get sort of mixed volume on the way down. So we haven't necessarily lost the OBV completely here, but that's why the OBV took that big move on the rally, just because we had all this volume, and each day we were adding and adding and adding to the OBV. So
it looks like Schwab also had that overhead failure at $49. I mean, if you go back, you look at all those lows at 49 and could not get back through.
Sure, absolutely. So yeah, I would be expecting to see this one move lower. Interesting, though, of course, that TD Ameritrade was upgraded today while Schwab was downgraded. A couple of other big name downgrades: AstraZeneca, PNC Bank, Madrigal Pharmaceuticals, MWL, and you talked about Spectrum Brands, Tom. It was downgraded today as well. So that's all of our upgrades and downgrades. I've listed them there for you, and I will put them in the Market Watchers Live recap, so you can look at them more closely later.
Yeah, all right, Tom. That SPB chart, I don't blame them for downgrading. I mean, first of all, that earnings report was horrendous, and the chart itself, that was the one where I was showing that the relative weakness has been so bad. That's actually in a strong group, but the chart obviously is not. That company's not getting its fair share of money flowing into the group for sure.
No, absolutely not. Yeah, that big gap down and everything. Ugly chart. Yeah. All right, let's get into those Monday setups. It was definitely challenging for me to come up with some, but let's look at what we did last week. And I'm going to steal that screen so we can get a look at these charts. So yes, we had Wingstop and GoGo. It wasn't a good week, Tom. I would have to say, at least for me on the Monday setups, let's take a peek here.
Yeah, GoGo'd at the first 2 or 3 days last week, and then it went.
Yeah.
The last couple of days, it was not.
Dog. Let's get to GoGo.
Yeah, they came out on, I think it was Thursday evening, with a $215 million convertible senior note offering. And what that typically does is dilutes the shareholders, because under GAAP, generally accepted accounting principles, not the GAAP on the chart you're looking at, but GAAP, generally accepted accounting principles, earnings per share is impacted by these convertible notes. Especially if the price is such that they effectively would be converted. So a lot of times when they come out with those offerings, you're going to see these stocks get hit pretty hard to the downside. So I think the announcement came out Thursday evening, and I believe this morning they actually priced those notes, and the market doesn't like it. So GoGo went up. I know actually this was one that I was fortunate enough to get out of. I traded it last week and actually made money on it, but then the stock absolutely got crushed on that news at the end of last week. And this is one, you hate to get caught in this, and that's why I tend to avoid earnings reports, because you just never know what you're going to get. But as far as these secondary offerings go, a lot of times there's just no warning.
Right.
Stock just gets hit, and at this point, it's hard to, I don't know, without being in this one, what I would do with it, because the stock's down so much. I think I'd probably see if I could get a little bit of a bounce in it first. Mm-hmm. But I tell you, anything close to 5.25 on a bounce, 5.25, 5.35, I would be out of it. So if I could minimize my losses, that's what I'd be looking to do here.
All right. Let's see. What did Wingstop do? That was mine. And here's a 10-minute bar chart, so I figure that'll give me a good look here. Pretty much sideways, but we ended up in it back here, and I think, let me go back. Let me look at my Monday setups, because I do have that one already in there, and then we'll look at what I have for this week. All right, that was the Wingstop one right there. All right, so my stop was at 60. We never really hit that, but we got in at 67.96. It's to 64.95 right now. I mean, it was a loss. It wasn't horrible, but I got in right here. If you look at the thumbnail, pretty much right on the way down. So There's the PMO. Remember, it looked really good. I'd gotten above the 0 line. It was headed for a buy signal, and then boom, it lost all of its momentum. And at that point, I would have probably, looked at maybe getting out, just seeing a top starting below the 0 line or the signal line there. So let's see, what do we have this week? So this week is a little interesting. I ran scans and I just didn't like anything. And I'm like, you know what? I found a couple that I liked on the buy side, but I actually ended up coming up with 4 of them on the short side. I figured that might be a way to move with the market here and try not to buck the trend, which right now is down. So I'm thinking a short isn't a bad idea. So here's what I came up with. First are the buy ones. Kimco Realty is one that I put as a buy. And I know this is not my typical buy setup here. Let's see, yeah. Because you do have that PMO, it's turned over and now it's just coming below the 0 line. But I liked that it held this support area here, and it's starting to come back up. This one, like I said, I'm listing it as a buy, but you can also see there's some pretty strong resistance that it looks like we've gotten above, but I'd like to see it get above the 200-day EMA. So I didn't pick it. You could make a case, honestly, too, for a double top. I can't get into that. It's a reversal pattern, and it looks more like we were coming down toward it and in it, so I wouldn't look at it. I didn't think it was a valid pattern necessarily. We could actually be forming a double bottom at this point, but we'll see. At this point, that would be a possible buy. And the other one was Public Service Enterprise. And like I said, I was struggling to find stuff on the buy side. So they're not even that tasty, honestly. This one I think was okay as far as a tasty type of a trade. You've got $54 is really, that's your support level. It's currently holding that. It's managing to stay above the 20. It just had that 520-day EMA positive crossover. It's in the utilities sector, which, when things are not looking good in the market, that's considered a defensive sector. So, I think there's some possibility here on the buy side for PEG, Public Service Enterprise. But I was more interested, honestly, in the shorts. And so I'm just going to look at these real quick for you. This one, we've got the top below the 0 line. Momentum is shifting, continuing lower. We don't have the sell signal just yet, but I would expect to see it. I think you could look for a move down to the $34 range here to test these lows. But I think you could move down even farther. Because if you look at this, the $34 is holding, but I don't see it matching up that well with some of the previous price moves on the weekly chart. I think we could even see it move down to the $32 range. And look at that PMO, pretty ugly on the weekly chart, and that's kind of what you want to see. So CFG was a possible short. This is Capital One Financial. I'm looking at this as a shorting opportunity in the shorter term. You've got a move I would look for down to the $85 area. We have a top below the signal line for the PMO, getting ready to head for a sell signal. So this is one I was looking at as a possible short. And Lincoln National Corp. Lots of financials here, ending up in my short category. I think this one looks quite good for a short as well. 62.50 is holding right now, and that's kind of in line here with these lows. It's certainly with the low back here in October, but I would be looking for a move down to that 57.50 level. So I'm thinking this one is going to be my pick, but we're gonna look one more. United Rentals. And again, same setup. You've got the PMO topping and getting ready to have a sell signal below the signal line, the 0 line. Very ugly looking. I would look for a move to test the lows back here at about 105. But as far as a Monday setup, I didn't think there was that much potential as far as beating Tom, with what's going on. So I think I'm going to go ahead and pick Lincoln National as my short. So this would be considered a short, and we're at 62.54. And yeah, I'm looking for it to come down to at least 57.50. So that could be a pretty decent percent move.
All right, there you go, 62.54.
Yep.
All right, let's take a look. I'll go through here pretty quickly. Etsy, ETSY is going to be my pick for this week, but I will tell you, let me get an update, just make sure this is updated. 45.90. So I'm going to go with it at 45.90, but given the high volatility still present in the market with the VIX back up over 20 today, I am going to keep a very tight stop, and my stop is actually going to be at today's low. If we go back down below that earlier low of 45.10, I would be out. We're already below that top of gap support, which is where I like to trade. And if we continue down below the moving averages and we move to a new low, I'm going to be more afraid that we're going to go back and fill this gap to 40 and change. So I want to keep a tight stop here. This is a company that did report great results, gapped up. Stock was at just over 40. It gapped up to 46 and change, went all the way up to 56, and it's come all the way back down now to around this 46 level. So I like the reward to risk. I just don't like the market. I don't like the high volatility. And so I've got to keep a stop in play. One thing that I do make, a big change that I make in my trading strategy is when that volatility index, when the VIX is elevated, I use intraday stops. And I don't like intraday stops because a lot of times it's the intraday where market makers are kind of shaking folks out and they reverse things on you. I like to hold stocks into the close. The problem is in a highly volatile market with the VIX high, you can see how fast these stocks sell off. And I'm going to talk about a couple of trades that I had when I do the earnings spotlight with John here in a couple minutes. But the problem is that when you get in a highly volatile market, a lot of the market makers do what I consider going on vacation. They're there to support the market, but all of a sudden there's no buyers in the market, and you don't really get that much selling in terms of volume a lot of times, but the stocks just go down, and they keep going down because there are no buyers to support the market. And I think you got to be careful with that in a market where the volatility index is elevated like it is now. So ETSY is going to be my trade for this week, 45.90. I would keep a very tight intraday stop, no more than 2% to the downside. And if it violates it, goes down below that, I would just take my loss and move on. To the upside, if the market can stabilize, I think this is a stock that easily could get back up into the 50s. I think could set up a very nice reward to risk. It's almost one that I would probably hold off and see what it's doing later today. See if we're getting a recovery into the close. All right, some other stocks that I had on here as well. And in my blog article today, I went with Fitbit, FIT. But I was watching earlier, I don't like this move down below that hammer, the tail on that hammer. So this would be one I would simply be watching at this point. If I was in it, I would have gotten stopped out on that move below that hammer. Again, when you talk about gap support, top of gap support near 550, bottom is all the way at 475. I don't want to ride it all the way down there. So Fitbit, I would be very careful with here. UAA, these are all stocks that I think, again, if we reverse later today, I think they could be great trades because they are breaking down intraday. UAA, Under Armour, taking out the tail that we saw from last Thursday, also moving down into this huge gap support zone. I don't know exactly where it might turn. I'd wait, though. If you get the turn this afternoon, it could be a great buy. CRNT, I've been waiting a while for this one to come down. Hasn't quite come down to my buy point. I think that's 409 right here at this high. You see the double top, big breakout. Look at all the volume on the way up. Volume coming out on the way back down. 20-day moving average coming in. This one from that 20-day moving average up to 409, I could see buying in that area and having a fairly tight stop below that 20-day moving average. And last two, KEM, Kemet. This one, again, breaking down below these prior lows. Seeing this across the board on a lot of stocks that reported strong results, have nice support in play. But again, volatility on the rise. You want to make sure you're very careful on these stocks when they start breaking down. So KEM is one that I would keep on my list of potential trade setups. I would not be buying it right now. I'd wait and see if we get a reversal later today. Adobe was another one. I thought there was a nice positive divergence on the stock. Check out what is going on here with Adobe today. Now, keep in mind, all these setups were done over the weekend before we had today's action. with today's action, I probably would not even be showing these. Adobe, if it has this long tail to the downside and can come back up to 235 by day's end, that would be incredibly bullish. But short of that, I would be sitting on the sidelines with this one as well. So there are the setups, or the non-setups in my case. I don't even know what I'm doing. I am almost entirely in cash at this point. I got stopped out of a lot, which I'll talk about in a couple minutes. But I'm in watch mode. I want to see what the market does here with volatility on the rise. But I went with Etsy, tight stop. Erin is shorting LNC, probably a good move given what's going on in the market. And there's the rest of our stocks that we discussed today.
Yeah, it just was a matter of no results from my scans. So.
Yep. Well, if you're, have a certain style and you're not getting any results, then it probably makes sense not to do any of those types of trades. So, All right, let's move on. Earnings Spotlight. This Earnings Spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com. Better timing, better trades. Welcome, Mr. Hopkins. How are you doing today? I'm not hearing John. John, are you there?
I'm here.
Oh, there you are.
Yeah.
How you doing?
Oh, well, you know what I was thinking?
You're probably doing about as well as I'm doing. I'm thinking.
Yeah, well, this is a time of year, a week where people should be grateful. And the market's ungrateful today. What can I tell you?
Yes.
The market's just in a bad mood. Without question, the market really, Tom, if you stop and think about it, maybe you already talked about this, but if you stop and think about how the market charged higher for a long time, it had that great leadership. Stocks like Facebook and Apple and Netflix and Google and Amazon. And honestly, I think, with those breaking down, it's hard to imagine the market making a lot of progress. We're going to find out. In other words, can the market, sustain and move higher if those FANG stocks are left out?
No. The answer is no.
Yeah. And I think we're seeing that. I mean, if you take a look at Netflix, for example, it wasn't on my list, but if you take a look at Netflix, it's the second time it's tested that, 171 level, got within a few pennies of, it got within just a few pennies of that last low.
Mm-hmm.
And I think, if that goes, and Netflix, by the way, is probably like the king of the FANG stocks. It has been. But you look at how much it's deteriorated, and I think that traders are thinking, if these stocks go, what's going to hold up?
Yeah, I would say going back into the summer, it may have been the king. I think going further out probably is Amazon. I mean, Amazon.
Or Apple even.
Yeah, I mean, Amazon had that double top. I mean,
yeah.
Amazon was closing in on Apple in terms of market cap before October. And of course, we saw the huge drop, and now Amazon moving back down toward those lows in October. And I would point to the lows really back in early February. I think from an overall market standpoint, I think those are the ones that I think that low is very, very important for the market as we move forward. And some of the stocks, Amazon, Apple, they're not really close to those lows that we saw back in February. I'm going to just stretch this chart out so you can see. We'll go back a couple years here. But here was the February low on Amazon. It was all the way down under 1,300. We're still above 1,500. And if we look at Apple, clearly the low in February down at about 150. We're sitting up at 186. So those lows are nowhere near. I mean, so we're still on a relative basis seeing strength in those stocks. But I tell you, the market right now, anytime you've got the volatility index elevated, and that's what I was going to just talk about here for a second. I wrote an article in Chart Watchers over the weekend talking about a couple things that you really need to master as a trader, because you're going to go through these periods. And I've been doing this for a long time, and I still make a lot of mistakes, and made a couple on Friday. But here you can see the volatility. One of the things that in order to be a really good trader, you have to be able to deal with these emotional markets, because we're going to get them from time to time. And I really think when you've got a volatility index, now this is the 10-day EMA of the volatility index, but it is moving straight up back in January, even before we topped in the market. And then as we topped, you can see when that volatility is on the way up, a lot of times what you're going to see is a market that is completely cratering, especially when you get up into the upper teens, 20s, or even into the low 30s, you're going to see a market that I referred to earlier where market makers are on vacation. There's no buyers. It's a buyer strike, and markets fall very, very fast. So if there's one thing I've learned over the years is when you're in a highly volatile market like we're in right now, you have to have intraday stops.
Yeah. Yes, I agree.
Because you sometimes by the time a stock opens to where it closes can be huge. In an uptrending market with a low volatility index, I hold stocks. I do not trade intraday. I almost never have an intraday stop. I always look at closes. But in an emotional market like this, I think we're in a completely different environment. And I don't know if you were listening, but with Etsy, I was just talking about on as my pick for this week. But I would keep an intraday stop below that low that we had earlier today, because I don't, if the market just falls apart this afternoon, I don't want to just hold on to these stocks and just go for the ride to the downside. So,
well, let me ask you a question. What do you make of, if you go back, if you take a look at the S&P, actually, no, if you take a look at the, if you take a look at the VIX and you go back to October 26th, when it was, I think, around 27, and that was the same time when the NASDAQ was pretty much at the lows we saw today. So in other words, the low got to 7057 on October 26th. Today it's gotten to 7042, pretty close. The VIX was about 8 points higher. Do you make anything of that at all? Is it at all like a positive sign that the VIX is really much lower than the last time we were this low?
Well, if I was comparing, I would probably do the VXN, because the VXN is the NASDAQ 100 volatility. So here you can see that it has continued going higher. Did reach that high on October 29th, and then I would pull up the NDX to compare it. If I could type NDX, and the NDX was at a low. Now we're getting back down very close to this low with the volatility index lesser, but it is rising. I mean, we don't know where that the VXN is going to top. Now, if we go down and we put in a false breakdown here on the NASDAQ 100, let's say we take out this low and come back up, and the VXN is much lower, then I would say that probably on that double bottom, we're starting to get a lot of that, the volatility. I still don't think we're completely out of the woods until we start to see this volatility index move back into normal areas. And I would say it's got to get back down below 20 before I would be overly excited about the market. Even trading, even if I think the market's going to go up in the short term, I think when that volatility index is up there, you still got to be thinking about taking profits quickly. And that's where, before we get into a whole lot, I'm going to show you two stocks I had last week. I'm kicking myself, absolutely kicking myself. Twilio, big earnings report. Stock just absolutely explodes. Look at the volume coming in, opens at 82.50, gets up near 100 the next day, comes all the way back down. I literally bought this stock at 82.90 or something last Thursday. And that same day, the stock was up over 90. I mean, it was up 9%, something like that.
Yep.
And usually I take it. And this one, I just loved the stock, had my target up here at 96, didn't take it. And I can only tell you that this morning I ended up getting stopped out, and I literally lost money on this trade.
Yeah.
Because I didn't take it.
Yeah.
It's painful 2 days later. But in a highly volatile market, this is not unusual. It's not unusual to see these big moves up and then big moves back down, but I didn't take it. And the other one I talked about was one I wrote about last Wednesday in my blog article, a special article I wrote. We had a false breakdown here below this prior low on Tandem Diabetes. Stock ran up. I was up 10% on this stock in 2 days. Trade it. Did not take the profit. I was only looking for the 20-day test. Got pretty close to it. Could have easily taken the profits. Didn't do it. And today I got stopped out with a loss.
And that leads to this whole, notion of, trading in a volatile market. And I talked about it in my article in Chart Watchers over the weekend. What's really interesting, is the third quarter has been rough, even up till today. Even with some of the bounce we had, now we've got, I think the NASDAQ's down, 10, 11% for this quarter. I think the S&P is down 6% plus, maybe 6, 7%. And I was taking a look at our trades at earnings beats. We actually had 29 stocks that were trade alerts to members. And of those 29, 18 actually stopped out. 11 were winners. But the amazing thing, this has been very consistent with us, is that on a risk-adjusted basis, we were up about I'm talking about through Friday, we were up about 2.65%, versus the market getting hit pretty hard. And it all has to do with taking, your losses when they come along and your profits. And the one stock I pointed out, we have to look at it, is GoGo.
Yeah, that was my setup from last week. I got out of that one in time. That one I actually did take about a 9 or 10% profit. That was coming off of this 20-day test. Nice pop. But yeah, this one, got hit.
That was this is a stock, that we took advantage of. It made a really nice move and pulled back to the 20-day. And we put that out as an alert. We had a price target of 7. It got to like 680, which put it up about 9%. And that's when we issued the profit alert and said, let's take the 9%. We're within 1% of our target. The market's volatile. And then, of course, we didn't have any way of knowing this, Tom. But within 2 days, the company, I think, had a secondary offering and it got smashed. So, no, we didn't have any insider information, but it was more just the way the market is set up right now and the volatility. You take those 9 and 10% winners, even if you don't get every penny out of it. And this is the reason why, just like you with, the one you talked about, the TNDM.
Yeah.
It's sort of the same thing. It works both ways. You have to have your stops in place. And our average stop during the quarter has been about 3%. But the good news is the average winner, has been, let's see, it's been about 7.5%.
Yep.
So even though we had more losers, we kept our stops tight. We took the profits when they come along. And I think in this type of market, this is what you have to do, Tom.
Well, I know on Friday, and sometimes you just kind of get in the way of yourself as a trader. And I definitely did that last week because I had these trades. Normally, I'm pretty consistent. If I get 8 or 10%, especially in just a day or two, I normally take it. Yeah. I don't even ask questions. I just move to the sidelines. I mean, that accomplishes a lot of things. Number one, obviously, it books a profit. But more importantly, you moved it back to cash. So, the overall market making 8 or 10% is going to take a while. If you have positions out there and you make 8 or 10%, you can outperform the market, especially if you're doing it over very short periods of time. But I didn't, like I said, I didn't take those profits. And what I was thinking was, I've been talking about it a lot, been writing about it a lot. November and December into January tends to be a very, very bullish time of the year. This particular week coming up, I had gone back and looked, and I think the NASDAQ over the last 6 years during Thanksgiving week, there's 4 trading days. It's the last 6 years. That's 24 trading days during Thanksgiving week over the last 6 years. 22 of them have been higher. The market, whether it's Thanksgiving, whether it's Christmas, the market tends to get in pretty good festive moods during these holiday weeks. Now, clearly today, that is not the case. And so I let my historical bias kind of influence what I knew better as a trader. Didn't take those profits and then paid the price pretty significantly today. And you might say, well, yeah, but you didn't really lose that much money. Well, I did, because that money was in my account. I had a 10% profit on Tandem. I had a 9% profit on Twilio, and I watched both of them erode.
Yeah, well, and yes. And again, that is what this nasty market is about. Like, and you hit it on the head when the VIX is like that. Remember for months and months and months, the VIX was 10%, 9%, 10%. And now, got up to 26, 27, 28, higher. Now it's hanging out 20, just elevated. And I'll tell you one thing, you still find, Tom, that the best of the best hold up well. There's going to be some that, that don't make it. But we've been very consistent with the companies that beat earnings, make a nice move higher, pull back to key levels, keep a tight stop in space. But we'll be talking about that later, by the way. And we'll have a little event later this afternoon. If anybody's interested, you can go to our website, Earnings Beats, and if you click on About Us, there's a today's webinar link. It's got all the details. So,
yeah, I'll pull that up 1 second. I do want to pull up the poll and see if we can. I deliberately did this poll because I think that the market there's a lot of difficulties in trading in the short term, especially in a volatile market. And well, I tell you what, let's go ahead and do the summary first.
Yeah.
Some of the things that we've talked about, and then we'll pull up the poll.
Okay.
Okay, so there, we talked about GoGo. I actually had pulled up ETSY earlier.
Yep. And UAA.
And UAA. That one is one that I liked, and I still like if it reverses today, along with Etsy. But I'll tell you, the market needs a reversal, no doubt. Well, now let's go ahead and throw that poll up there because, I don't know personally which ones you've struggled with in your own trading, John, but I know for me that when I look at the market and I see volatility, one of the things, and it bit me again on Friday, was not taking the profit when I had it. And, I'm usually pretty decent about doing that. And I see that's number 2 here on the list among the responders, staying disciplined to take profits. But, I've been doing it a long time, and I failed to do it again on Friday. And it really is irritating when, as soon as I got up this morning, I saw the red futures. I was like, okay, this is not going to be good. And I literally was not at my computer right at 9:30 when the market opened. So I had some issues there. Didn't get to by the time I got to my computer, the gains were gone on both those stocks that I talked about. And I had some other stocks I got stopped out on as well. They didn't get hit quite as hard.
Sure.
Twilio and Tandem. But nonetheless, looking at that list, is there one or two that bothers you or you struggle with, or maybe members struggle with at earnings beats?
Well, I really think that if you talk about individual members, okay, I think setting a stop, it's hard for them, because a lot of people will take a percentage and say, I don't want to lose more than 5%, and that'll be my stop. I don't think that's where you set a stop. I think you set a stop by zeroing in on a key support level, price or technical level. And I think a lot of people, maybe they don't understand that, because you can see here, the bulk of the people are saying the number one on here is where to set a stop.
Right.
Or not setting stops at all. If you don't set stops at all, it can be murderous.
Yeah, especially in a highly volatile environment like the one we're in right now. We're in a bull market. In 2017, we didn't need stops. The market just kept going up and we hardly had any pullbacks. But 2018 has been a completely different animal. And if you don't have your stops in and you're holding for a week or two on some of these moves to the downside, some of these high growth stocks getting absolutely crushed, you have to have stops in play if you're trading them.
Absolutely.
Different market for sure. All right. I want to point out one thing before you go, and that is from the member dashboard. If you click on, just want to help folks out there, if you click on blog articles, then just simply scroll down and you go through these chart watchers articles, John's, you really can make money in a rough market environment. I just want to point that out because at the bottom of this article is where you can click to get the link to this webinar that we're going to do this afternoon.
Yeah.
It is going to be very timely, I think, given everything that's going on in the market. I'm planning to share some of my favorite stocks on that strong earnings chart list, stocks that I am going to be waiting to see if we get some reversals. They're going to definitely be stocks that I look at to possibly get involved in. And anyway,
beautiful.
Take a look at this and join us today if you have time.
Okay.
All right.
Thanks much.
Stopping by. Thanks, John.
Take care.
All right, there he goes. Earnings spotlight. Wow, I tell you what a crazy market we are having right now, Erin.
Oh, absolutely. I have to say, when I was looking at the answers for the poll myself, my answer actually wasn't there. My problem with short-term trading is I just don't have the time to watch a bunch of positions because I'm not married to the computer all day. So that's really the hard part for me with short-term investing, is just being able to have the discipline to watch it every day. And that's, I have the opportunity now, market watchers, more than I did before, but that's usually my problem with short-term trading.
I would say this. I think that's a very, very legitimate concern. And it's probably one that should have been on the list. And I'm sure there are a lot of other folks out there listening that are probably shaking their head yes right now. Because I think a lot of folks don't have time to, especially if you got another job. And it's one thing if you're retired and you love watching the market, and that's the way I am. I'm not retired. but I love watching the market.
Yeah.
I do it all day long. But if you're not at your computer all day long, especially in a highly volatile market like this, and you just go away for a day, imagine coming back and looking at your stocks after, what's going on with the market today. I mean, I would say this: when the volatility index is up above about 15 or 16, I wouldn't trade. If
Right.
I couldn't watch it, I wouldn't trade.
Right. No, that's it.
Yeah, and I don't know how everybody else would feel about that, but I think that in the market that we're in right now, it's just really difficult if you can't literally keep your finger on the pulse almost every day. And it's very emotional. And believe me, I did not like getting stopped out today. If the market reverses today, I'm going to be throwing my hands up in the air. But you just have to protect yourself to the downside. And so I would agree with the number one answer. I think number one for most people is setting stops.
Mm-hmm. That's a lot of what we get from viewers, I would say.
Yep.
No doubt. All right. Let's see. Let's go ahead and get to the RRG real quick here.
Okay.
All right. We had 28 requests today. Here's what we got on the RRG. Not a whole lot of real outliers here. This was the sector situation here. Pretty much a healthy mix of all of them. Obviously discretionary, technology, healthcare are leading as far as requests, but not so much more than some of the others. So, all right, let's get started then. We will start with biotelemetry, BEAT.
All right, BEAT. Oh, I love the ticker symbol, one of my favorites out there, but that's not why I'd buy the stock. You got a big move up. This was earnings related. I do believe this is a stock on my strong earnings chart list. The stock ran, literally it was at $51 at the end of October, came out with its earnings, and a week and a half later was at 70. I think that's a pretty good sign. There's some serious accumulation taking place when a stock goes from 51 to 70 and the volume is well above normal for 6, 7, 8 trading days. But that doesn't mean I would chase. And what I find here that's interesting is 5 days later, the stock drops from 70 all the way back down to 57 and change, pretty close to this breakout level. Similar to what I was showing you earlier with that Twilio, TWLO, where the stock opened at like 82, went up to 96 or 98 or whatever, and was quickly back down to 82. I don't chase stocks. And so I think pullbacks on BEAT down into this 55, 56, 57 area is where I would look for entry. And your target would be up near 70, and I'd keep my stops tight, especially in this environment.
All right. The most popular in the chat room actually is somebody quoting or just saying a comment, which is, you might need help from a good mentor if every trade turns into an investment. That was the most popular thing in the chat room. But as far as our symbol requests, we're going to use, looks like Verizon is one of the top 2, and I will do the other one next.
Yeah, I think Verizon still looks good. I mean, there's clearly stocks that, are still performing well in this market. We did consolidate after breaking out back in October, sideways consolidation, another breakout, nice volume. It's a little overbought, so I would be looking maybe for a pullback to this 58.5 area. Rising 20-day coming up from underneath should provide some support as well. But yeah, I mean, there's still pockets in this market that are doing well, and Verizon's in one of those pockets.
All right. Let's see. The other one that was most popular in the chat room was Walmart.
All right. Walmart continues to drop. I didn't like the fact that it dropped below 100. So we had that high that was established on the gap up with earnings back in August. We actually broke out, kind of went back, tested it, and then broke out again to the upside. But on this move back down, we could not hold 100. And look at the volume. This volume on the way back down, the selling here was heavier than what we saw on the way out and through the breakout. So some not so great things here. It looks to me like we have a shot maybe, especially in a weak market, to go all the way back down to test that 93 support.
Okay. Next one up, a consumer staple, our only request consumer staple, Kroger, KR.
Kroger was on my list of potential setups for this week, and I just got, I only wanted to go with a handful. So I ended up, it didn't quite make the final cut, but I did like that reversal on the 20-day moving average. It does have some overhead gap resistance that it's got to negotiate. That was from this close back here in September, the huge gap down on heavy volume. We made our way all the way back up there. Look at all these tails. Couldn't get through, came back, held the 20-day, now turning back up. So I think to the downside, I would be watching the low that we just saw last week right here, and that 20-day moving average. I think if you go below 29.5, I'd be a little concerned in the near term, but otherwise, I think this looks pretty good, and a breakout above 31.60 is what you want to see.
All right. Let's see, the next one I'm going to give you is for our Canadian friends. It's a materials stock, FNV.TO, Franco-Nevada.
Okay, nice breakout, pretty good volume, and the breakout I'm looking at, I'm going to go back just a little further here. Let's go 1 year because I can't quite tell on these prior lows if those are important lows. Well, not really. I think that the move down on heavy volume, you can see these reaction highs coming up at around 87.5. That was a level that I felt like, should have been or needed to be taken out. And we just did that on Friday. We did it with some pretty good volume, continuing to move up. I would watch maybe this, there's some pretty big volume on this gap and huge move down. You see this volume right here. I think that's going to be a little bit of a struggle. So maybe we just kind of bounce in here in this 87.5 to maybe 90.5 range. We'll see whether or not we can get through. If we get through, I think that would be very bullish and could lead to a move all the way back up to 98. So mixed signals here. I mean, you're in a downtrend. So anytime I'm in a downtrend overall, I want to make sure I have my stop in play. I think if you close below 87.5, I would be out of the stock. That was a decent overhead resistance level. Now that we've broken out with volume, I don't want to lose it.
Okay. Next one up, let's see, a pharmaceutical, Spectrum Pharmaceuticals, SPPI.
All right, SPPI. Oh, not liking this one. I mean, it's going to need some volume on the move back to the upside, I think. And today it was trying to move up and leaving that long tail up there above the 20-day moving average. I think there's a couple areas. Number one, I think you're going to have to get back through probably about 14.25. That was the prior low. We went right through it. Volume was so-so on that move, but you can see the huge volume on that big red bar there. The problem is that we've got this downtrend. If we go back down, put in a false breakdown below the October low, we do have a nice PPO. So then that would probably give us a little bit more of a, positive divergence, maybe give me another technical signal to buy, especially if we go back down there on light volume and then have that false breakdown. But that would be about the only thing for me because we just recently broke down. I'm not seeing a whole lot here that I like. And with the volume just kind of so-so on this move back to the upside, I think I would pass on it. So I'm going to wait and maybe see if a positive divergence develops on another low.
All right. In the renewable energy industry, let's look at Sunrun. Run is their symbol.
Yeah, renewable energy has been very, very weak. Run, I would say probably on a relative basis is holding up. Let's go ahead and pull that up and see. Yeah, here's the renewable energy space. So the overall group has been down. Maybe that's some kind of a capitulatory bottom there. But Sunrun has actually been holding up pretty well, been going sideways here the last few months. So on a relative basis, you have one of the better stocks. That's the good news. The bad news is there's just not a lot of money rotating into the group. So if the group would start to strengthen and get a little healthier, then I think you've got the possibility of this stock moving back up. What I would look for, and again, this is going to be somewhat dependent on the group coming back into favor, but I'm just kind of looking at this as maybe some kind of a rounded bottom here. And if we can get back up through the 13, 14 area, I think that would probably likely send us back for a run up towards 16. This is all coming off an uptrend, so a cup here would be a nice continuation pattern. But again, you need that group to do something. And right now, renewable energy just continues to languish.
Okay. Let's see, the next one we're going to do is, Tractor Supply Company, TSCO.
All right. Somebody's looking at my list of possible candidates to trade this week because this is one that I also like. Tractor Supply, if you go and you take a look at that double top breakout right there on volume right in here at the end of October, notice the pullbacks have been holding around 91 or so. Again, in this environment, I don't want to hold it if it starts to break down, so I'm going to keep a fairly tight stop. but I could keep my stop around 90, 91, target up near 97.5. And overall, I think with the stock breaking out and the group actually moving lower, you have a pretty nice stock within this space. And you can see relative to the S&P, it's done pretty well. And so far, it looks like the group, specialty retailers, trying to hold up above that August support level, relative support level. Still got some work to do, but I like the stock itself, especially if the group returns to favor.
Okay. Let's try an ETF, the Emerging Markets ETF by Vanguard, VWO.
All right, I don't need the relative chart for this. Okay, VWO, still in the downtrend, printing lower lows, lower highs. So only thing I would say here is I'd need to see this begin to turn back up again. I think one of the big problems here is the U.S. dollar. Even though the dollar's been weak, I would say over the last week or two, the overall trend in the dollar has been higher, which I think is making it difficult for this group to get going. If we could get back up and take out the prior high here at 40, that would begin to show some strength. But until then, I would sit and wait on the sidelines.
All right. Let's see our very last one from the technology sector, Symantec, SYMC.
All right, SYMC. Oh, nice breakout here. Test of support. This one I think looks pretty good considering what's going on in technology. But here is the double top. Here was the move through on heavy volume with earnings. We did come just a little bit below, so I'm going to make that support level right in here between about 21.5, 22. You've got the rising 20-day moving average coming in at 21 and 28 right now. I think all of this, I wouldn't buy it here. I would wait and see if I could get it somewhere back into this 21.30 to 21.75 area. I think you could manage your risk a lot better on a long trade from that area. But overall, I think this looks pretty good. I like the volume trends that you can see down here. Pullbacks have been, for the most part, lesser volume. So I'm a fan.
All right. And that completes the 10 and 10. And here are the symbols that we just went over. I will have these up in the Market Watchers Live blog in the chart list. So just go to the blogs tab, click on the Market Watchers Live blog, and the link to these charts and our live chart list is right there at the top. All right, time for our final market update. Let's see what is going on right now in the market. All right, here we go. Not good. It's still not good. Might be finding a little bit of support right now with a pause for the Dow and most of the large cap indexes right now. The Dow is down almost 1 3/4%. NASDAQ is down 2 3/4% right now. And S&P 500 currently down 1.66%. We can see that the S&P 400 and small caps, Russell 2000, following suit with a decline, but also seem to have hit a low right now and are trying to bounce back off of that. Currently, let's see, the Russell 2000 is down similarly to the S&P 500, 1.66%. Canadian markets also lower, but do seem to have found an intraday low possibly here. TNX Treasury yields are down, currently 3.061%. UUP is down slightly, but maybe has found some support at an intraday low, down 1/4%. GLD up slightly, 11 cents to 115.73. TLT is also up slightly at 114.77. And finally, oil. Big gap down today, but has been making its way back up, not quite to positive territory, but almost there. Currently reading just under $12, $11.98 for USO. And that's all I have for my portion of the final market update. What you got, Tom?
I just have one chart. I'm going to show very quickly the S&P 500 on a daily basis. I just want you to notice all last week when we were trying to rally and things looked pretty good on the 60-minute chart, holding on to the rising 20-hour EMA. Just keep in mind that the daily chart, which kind of trumps that hourly chart, each one of those rallies was failing at the 20-day EMA as we roll over. So I'd be looking at this low that we saw Thursday of last week, which is down around the 2670 area. If that doesn't hold on the S&P 500, I say we go back down to the October low, and that is not far from that February low of 2582. Watch that number. Keep that number in mind, 2582. If we get a close below that level, things are definitely going to start taking more of a bearish turn from a price perspective. So, Erin, I know you've got the DP update, so everyone's waiting patiently. I'll let you get into that.
All right, very good. And here we go. This is our DecisionPoint report for November 19th, 2018. Let's see what happened last week and what might be going on this week. We'll be taking a peek at the weekly and daily charts for the major large cap scoreboard indexes. Mid and small caps, we'll look a little bit at those. Big Four, dollar, gold, oil, and bonds, and then I will cover our decision point indicators as well. So let's go ahead and we're going to start with the decision point scoreboards. These are the signal changes that occurred last week. As you can see, we're getting a lot of deterioration now on these scoreboards. In particular, the NASDAQ 100 is certainly having a little bit more of a bad time of it, with both the short and intermediate term looking at neutral and sell signals currently. So what this does tell us, the trend model signals are on the daily charts and are based on EMA crossovers between the 5, 20, 50, and 200-day EMAs. And the PMO signals are derived from the daily chart, the weekly chart for the midterm, and long term is from the monthly chart, what's going on with the PMOs. So at this point, the big concern I have as far as PMOs go are the intermediate term PMO sell signals. Right now we have sell signals that have occurred on those weekly charts, which I'm going to show you, and I find those to be more of concern than maybe even the daily PMOs. So we'll take a close look at those. I think we've still got some problems going on here. And clearly after last week, you can see that the trends were already switching over. All right, so let's go ahead and take a peek at some of these charts. All right, here we go. All right, so I'm going to start with the Dow, and like I said, I'll go through the daily quickly and then the weekly. What I've noticed right now about the Dow, let's see, I can get this a little bigger for us. There we go. One of the things I noticed about the Dow is the fact I'm just about ready to get a PMO sell signal on the Dow, and it's occurring below the signal line. These are especially bearish when I see these negative crossovers below the signal line. Granted, we had one back here. It didn't really pan out into anything. It turned out to actually be right there on, came in right before the rally, but the PMO did turn up as prices started to turn up. But I really, this I think is in a more dangerous place right now, only because, you know, we've just now, these rising bottoms trend lines, while they have been holding, currently right now not holding. The Dow is currently trading below that intermediate term rising bottoms trend line, and we don't want to see that rising trend broken. More than likely, should it break, I would be looking for a move down to the 24,000 level to test not only the October lows, but I would say, looking at the weekly chart, and let's go look at it right now, I think there's a really good chance, and when I look at all of these large cap indexes, a really good chance we could see a test of those lows back earlier in the year in January and February. Don't like to be the bearer of that news, but right now it's just everything is looking so weak. You know, we're getting stopped out of our trades. Just the rotation, the sector rotation is still very negative. I would like to see this rising bottoms trend line hold. This is a very long-term rising bottoms trend line. I want to see it hold like it did previously for the Dow, and then maybe I can make my perspective a little less bearish as far as testing these lows back here. Okay, let's go ahead and we're going to look at the others. I'm going to go to the NASDAQ last because it is different, in my opinion, than the other large cap indexes. All right, so OEX S&P 100, you know, it long ago broke this rising bottoms trend line. I don't even have it in there anymore because it's really doesn't tell us much. You can see we're also looking for a PMO sell signal coming in possibly today on the S&P 100. So those green arrows that we were seeing on the scoreboards in the short term for the PMO probably are all going to die, if not today, probably in the next day or two, should we continue to see more movement to the downside. So the OEX has lost that rising bottoms on the daily chart, but if I recall on the weekly chart, yes, on the weekly chart, we have a very long-term rising bottoms line where I'm taking these lows all the way back from 2016, and interestingly does line up with that October low. We tested it, managed to get back up, but then as we came back, we could not get to past that overhead resistance at these tops. We came right back down. Looks like we are getting ready to test that rising bottoms trend line. But again, I really am looking for tests of these February lows at this point, those January, February lows. And in this case, the low we got back, looks like at the end of March for the OEX. All right, S&P, of course, everybody wants to see that one. Another similar situation. We don't actually have the PMO sell signal on tap just yet, but it could very well come in by the end of the week. Here I've got rising bottom support off of the low from February and the end of March. And, you know, we lost that back in October, but held on to that 2,600 level right here at the low we had back in May. If we can hold this rising bottoms trend line, if we can hold the rising trend, we may not have to go down to test some of these lows back here in February and even that March low. But, you know, PMO sell signal below the signal line like this, it has me very, very concerned. I'm not going to lie. The weekly chart for the S&P, again, we've got rising bottoms trend line holding. These are from those 2016 lows. The 2,600 level held. You know, I think that's certainly a possibility that we could see the same. But, you know, looking at the weakness on the daily chart and looking at the weakness on those other large cap indexes, it's hard for me to really get too bullish here. I think we still have some work to do to the downside. Now let's look at that NASDAQ. I was telling you it looks a bit different from the others. And that is because we lost rising bottoms support a long time ago, or rising bottoms trend. We lost the trend. We've continued lower, didn't hold this area right here at that top in April, and the lows back here in May. That pretty much was shattered back in October. Tried to make a comeback, but we're unable to get past that March high. And now we're back down, getting ready to test the low from back in October. But like I said, you know, I've got a PMO sell signal on the NASDAQ 100, and look at where it's coming in, well below the zero line, in very oversold territory. So, I mean, the positives might be that these PMOs are in very oversold territory, but the tops below zero lines, the sell signals below zero lines, all of those are very short-term bearish. So I would be, again, I'm really cautious right now. Another reason I picked shorts for my Monday setups and not a lot of buys at this point. And look at the NASDAQ 100 weekly chart. You know, we did lose that rising bottoms trend line that had been holding up quite well. And now that 6,500 area is where we're looking at for possible support again. But like I said, it just is looking so weak. Look at this intermediate term PMO. We're not even seeing deceleration here. I mean, it's just free falling lower. So it's really hard to imagine that we're going to hold some of this support without going down to test those February lows. All right, so let's look at the daily and weekly charts for the intermediate term. Let's see here. All right, so S&P 400 right now, as you can see, holding the support from this October low back here, that intermediary low that we got before the low at the end of October. You know, that's holding up for the mid caps, and that does line up with that May low we had back here. The PMO, unlike the other PMOs on those large caps, we're on a buy signal, and yes, it is starting to turn over beneath the zero line, but it certainly doesn't look quite as bad as those large cap indexes. So, you know, there's a possibility we could continue to hold this area of support. But again, given what I'm seeing on those large cap indexes, it's hard for me to imagine that the mid caps and the small caps are really going to be able to carry the market to the upside. Right now, this is what I'm showing for the mid caps. What I did with the mid caps, and you'll see on the small cap weekly charts, is I had these rising bottom trend lines drawn from these 2016 lows like we were seeing, but it had been broken. And what I was looking at as I saw this rising trend, I thought, oh my gosh, I think these two lows and the low we had back here in October sort of match up without compromising the actual rising trend that this original rising trend line gave us. So I went ahead and added it. Normally I would not on the weekly chart just because a lot of white space here. It's just my preference. But in any case, although it was broken, it is managing to hold the rising trend on a longer term basis. But look at the PMO. While it's still in positive territory, it is getting ready to hit the negative territory. Again, bad news here. So don't want to see that. All right, let's get to IWM, the short term. Again, very similar situation here, topping PMOs below the zero line. And we're getting ready to come back down and test those lows again from late October. And I would look for that at this point. You know, you can see the scooter is you know, moving lower. OBV is not positive here. I don't think the small caps are that much stronger right now than even the large caps and mid caps. Here's where I was drawing that rising trend. It's pretty much staying intact when you draw the rising trend from the October low and that 2016 low. So really that rising trend is still intact as far as I'm concerned. But again, look at the PMO sell signal getting ready to go below the zero line on the weekly chart. There's just a lot of ugliness as far as these charts are concerned. All right, quick look at the short and intermediate term indicators. Last week, we were looking at the short-term indicators rising very strongly and getting ready to top. They did end up topping, and we saw quite a rollback on their readings, and now we're getting a tick to the upside. And I like the fact that we could see a bottom on these indicators, and it would be a higher low than we had the previous two times on both the ITBM and the ITVM. And I think that is somewhat positive for the short term as far as the indicators go. But my caveat here is that it's a tick higher, and they don't, you know, these little ticks to the upside don't necessarily result in a big move back up to the upside on these indicators. So I'd like to see a little bit more conviction on these short-term indicators to the upside. So again, you look at this and it just, you know, I'm seeing all these support levels that aren't holding, rising trends that aren't holding. Things are just still looking pretty bearish, I would say, out there. This chart I found to be somewhat good news. The intermediate term indicators had topped and were heading for a negative crossover, and they managed to turn themselves back up on Friday. Now, looking at a decline of this size, of course, today I suspect it'll be enough to pull these back to the downside. But right now, and as of Friday, it looked pretty good because we were seeing them move to the upside. All right, let's get into the dollar, gold, oil, and bonds. The dollar is still barely hanging on to this rising trend channel. This is UUP, but look what we've got here. We now have the PMO sell signal. Managed to avoid it last time, earlier in November, but not this time. We do have the sell signal on the dollar, and it is starting to break down out of that rising trend channel. It's not a decisive breakdown. I don't see huge amounts of weakness here as far as the dollar goes. I think we could certainly hold that 25.50, you know, the top from back here. in October. I'm not really getting too bearish right now on the dollar, but I am paying close attention because I think you could make a case for a double top here on UUP. The weekly chart, I think, looks okay. It's just, we had that breakout last week. You can see well above that resistance level. And so far this week, of course, is only one trading day. We're right back down below it. So I would like to see it get back above and Friday close above that level at 25. Looks like almost $26. I'd like to see it get back up there by the end of the week. Otherwise, I'll start getting a little bit more bearish on the dollar. You can see that the PMO is trying to top as well. Gold, if I'm feeling a little bearish about the dollar, I should be feeling bullish about gold. I feel somewhat bullish about gold right now in the very short term. You've got a PMO that is now turning up. The scooter is rising, and we got a tiny little breakout from, above the 1220 area, which, has been holding as overhead resistance in the short term. After we got the breakdown, I was looking for a test of this level. I suspected that we were going to turn back down, but we did get the move to the upside on it. And like I said, the PMO is starting to turn up. One thing I've been watching is the correlation between gold and the dollar. Typically, it is a reverse correlation. They move in opposite directions almost perfectly a lot of the time. And we have seen a huge decoupling from the dollar. And that, to me, basically tells me that gold isn't quite as tied to what happens to the dollar. So, when the correlation is positive like this, if the dollar is rising, it's certainly possible for gold to rise at the same time. On the other category, if the dollar is declining, it could still bring down gold because it isn't as coupled as closely in that reverse correlation at this point for November and really the end of October is when we moved into the positive correlation between gold and the dollar. See a big back off on the sentiment. The discount rates have moved lower. Bearish activity with high discounts, you usually look for a rise. We got a little bit of one here. We'll just have to see if we can keep that continuing. I'm just going to look real quickly at what's happening today with GLD. In comparison. And as you can see, we're holding that breakout from Friday. Would like to see, if you look here in the thumbnail, would like to see it get up above that 116 level. If it doesn't, I wouldn't be looking for much more out of gold at this point. Weekly chart for gold. Oh, we're getting really low on time. PMO buy signal is set. We're getting more and more bearish activity. What I wanted to note is this rising bottoms trend line here is holding. And of course, declining tops continues to hold. And now we're at horizontal support here. So it'll be interesting to see what gold decides to do this week, if it's going to hold that 1200 level or if we're going to lose it. Yeah, we're at 28.33. I'm going to put the summary slides in here for you on USO. I would recommend that you take a look at the DecisionPoint weekly wrap. The weekly wrap will give you all of these charts. Carl gave his opinion, and there you go. Sorry, Tom, that one went really fast.
Yeah, time flies sometimes when we're having fun, but we do.
Yes.
It's a very rough market out there still. Dow Jones currently down 450 points. Do also want to mention Cyber Monday. Be on the lookout. Cyber Monday's coming up. Make sure you extend with the specials. All right, I want to thank everybody for joining us today. Always a pleasure to have you. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we'll see you back here tomorrow. Happy trading.